Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, April the 7th. Just wanted to take just a brief moment to discuss what markets did last week. We did just finish the end of the first quarter on the 31st of March. It was the first down quarter in equity markets in 2 years since March of 2020. We saw a pretty flattish week along most indexes. The S&P 500 was up 10 basis points, the mid or 0.10%. The mid cap index was actually flat, and the small cap index, as measured by the S&P 600, was flat as well at 0% growth or 0% decline for the week. Each index finishing between 4 and 5% negative for the quarter. So we really saw, as we were entering into the end of the quarter, especially the last 2-3 weeks of March, we really saw some nice upward trajectory and recovery in the markets. If you remember, in March, our lows for the market were 11.8% down on the S&P 500, and we rallied to about 4.6% down for the quarter. So a nice rally into the end of the quarter. But as we entered into the end of the quarter, we had the release of the Fed minutes from their last meeting, and the Fed came out and raised interest rates at the beginning of the month, and then in the middle of this month, and then we got their meeting minutes yesterday from their most recent meeting. And we had Fed President Brainerd out earlier this week talking about the Federal Reserve selling off their balance sheet pretty aggressively while raising rates aggressively as well to combat inflation, and that fighting inflation and tampering inflation has become the Fed's #1 priority. And so what you've really seen in markets this week is you've seen some pretty steep selling, and the reason for that is the Fed is going to try to combat inflation by dampening demand. They are going to raise rates so quickly and so rapidly that hopefully the demand wanes and supply is able to catch up to demand, lowering down inflation. And the Fed's trying to walk this tightrope between slowing down the economy and not really putting a recession in slowing down the economy when they're slowing it down. So they're trying to just gently slow it down to allow inflationary pressures to come up, but their policies have been so loose for so long that it's also helped exacerbate the inflationary environment that we're in today. We've had cheap money for far too long, and stimulus, and the Fed was still in buying assets last year as we were recovering. And so we did get the signal that the Fed is going to be selling off, I believe it's a little bit over $90 billion a month for the foreseeable future out of selling treasuries out of their book. And so what investors are saying now is, oh my gosh, are we at the precipice of a slowdown or a possible recession in the next year to 18 months? We did talk about the 2- and 10-year yield inverting last week. And at River Place, what we are seeing is that the Fed is going to be so aggressive in combating inflation that they are going to slow us down. That's where we believe we are. That's what our outlook is. So for you as the investor, what does that mean and what do you do? Well, you need to position yourself in a place and find the companies and find individual stocks that are able to cash flow very well, return capital to shareholders, whether that's through stock buybacks or whether that's through dividend payouts. Those are going to hold up the best in a downward environment as investors are weighing the concerns of a growth slowdown in the United States and potential for recession. So what you will see in the stock market, as always, is it's a leading indicator. So when people are guessing what they're going to see in the next 6, 9, 12 months. And so that's why you've seen a lot of selling pressure, especially in the NASDAQ, as rates have really ticked up aggressively this week. You've seen significant selling pressure in the growth names, and if you hold a lot of value names, you would actually see those names outperforming significantly in this environment. So if you have questions about what's going on or what we see moving forward, feel free to reach out and give us a call. We're easy to talk to. We'd love to talk to you about it. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. Have a wonderful rest of your week, everyone. Thanks so much.